Good afternoon, everyone. This is Henry Gamble with simplertrading.com, and in tonight's free video, I wanted to offer an idea to you that I think will be worth considering as we get into next week. Next week will be a full 5-day trading week, as where this was an abbreviated week, but more importantly, it brings up a witching expiration. Witching expirations only come up 4 times a year, and they are interesting times to study the potential of market influences that you may not see on other weeks. Basically, what I am looking for is coming in and looking at JP Morgan and considering the potential that when we get into that Friday, that this product is trading somewhere relatively close to where it is now, and the psychological price point of 100. On these expirations, you can just see how price can kind of gravitate towards them. And, I think it's fair enough to look at the chart and maybe say, yeah, that's a little sideways. Maybe I can see how it would just oscillate back and forth in between that range. But do you see how the Bollinger bands are coming to contract inside the Keltner channels? That is one thing that we study to show that this signal is compressing. So it's building energy, and I think that that build could continue through next week, because what you want to see, or what the funds that are selling the majority of these options want to see, is that this big bulk of them around the $100 strikes can expire worthless. So if we look at volume and open interest, do you see how there's 36,000 open contracts on the $100 calls, and then a very similar value over here on the put side? I feel like I'm not the only person with this idea. I feel like this is a combination between obviously players making bets on the directional side of 100, but then also traders looking at it and selling the short straddle. So you can either do it as the straddle, you can do it as the iron fly. If you'd prefer the defined risk, that might be smart in this environment, right? Because I think it's somewhere between chopping and it could break. I think it stays inside that range, but just think about mostly chop, staying within a couple of dollars of either side of 100 and not getting too directional or chopped up on a witching expiration. Another name that you can take this over and apply the same way of thinking is Goldman Sachs. So you can see the blue Bollinger bands contracting inside the Keltner channels, which just shows us that phase of compression, and then the psychological price point of 200. So you can do that just through selling the straddle, selling the iron fly, or even some butterflies if you want to get creative with it. But I think this is another name that over the next 5 trading days, you look for sideways price action more than you look for direction, and then once we get through that Friday, then next week look for the directional move. So I hope that is helpful and gives you something to plan around for your next trading week.